This is the Biz News Podcast, one-on-one conversations with experts in business and personal development.
Back in the day, well, the day of black and white TV at least, the comedian Groucho Marx hosted a TV show called You Bet Your Life. Fast forward, and now meet Mark Willis, who says using a form of life insurance can make a better bet for a person's finances. He says that after graduating college with a six-figure student loan debt, he found a way to turn that debt into real wealth, even as he watched many lose their retirement savings and home equity in the Great Recession of 2008. Mark Willis offers his insights in this Bizgnus Interview podcast. Mark, before we get started, one thing to clear up. Are you the country and western singer of the same name?
Well, that's a great question. Unfortunately, no. You've got the wrong guy. I'm also confused with Bruce Willis, but nevertheless, I don't think I have any relation to either.
Okay, well, you don't have to solve any hostage situations at high rises then.
That's right. Well, if so, then it's going to be a more exciting Wednesday than either of us expected, and I'm okay with that.
Well, you are a financial planner, but let's go back in time to when you graduated. And when was that? How many years ago?
Well, it was just in the midst of the great financial crisis, the global financial crisis of 2008. So a great time to be looking for work.
And you graduated with a tad of student debt. Tell us about that.
That's right. Yeah, there was an impressive amount of money they were willing to give me as I was going through college. But funny enough, they wanted it all back and more. And so as I was graduating in the midst of the Great Recession, I got this bill in the mail saying I needed to start paying them back. Funny enough, Sally Mae wanted her cash back. And I jokingly say I sort of married two women in college, my gorgeous wife and Sally Mae. And we wanted her out of our relationship as fast as possible.
So how did you do that?
Well, it was at first just a brute force, throw as much cash as you could at the problem. But funny enough, I would also have emergencies and other cash needs, buying a car. You know, life doesn't wait while you're trying to pay off your debt. So I would stumble back down the debt staircase. Each time I had an emergency or a cash need, I would just get a credit card or get a car loan or whatever it took. And I realized that the bigger problem was I was also throwing away my most valuable dollars. You see, no matter how old we are, the money in our pockets today is more valuable than in the future, just due to the ability to compound that money. So allowing that cash to go toward a creditor or a Sally Mae student loan, I was not only losing that dollar, but I was also losing all that money would have grown and earned for me had I left the money to grow and stay compounding for me instead. So I was helping Sally Mae retire instead of myself. And that was the biggest, I think, aha moment of my young adult life, was that I was financing my future self by really putting my future self at risk by throwing cash at the debt problem. So you asked, how did I do it? Well, about halfway through my project of paying off the debts the old-fashioned way, I found a little-known variation of whole life insurance called Bank on Yourself Designed Whole Life. Gave me the chance to essentially use it as like a bank, not truly a bank, of course, but like a bank for myself. And I use that cash value in my policy to wipe out my debts one after the other after the other. And that was, to me, better than paying cash because the policy continued to grow and compound even as I borrowed against it, giving me uninterrupted compounding as I became debt-free.
Well, why isn't that better known?
Well, that's a great question. I'm doing all I can to let the world know it's out there. It's been a strategy and a solution for people for hundreds of years in this country. People like JCPenney have used it for their business during the Great Depression. People like Walt Disney used it used a policy loan against their life insurance to start Disneyland when no banker would lend him a dime. People today, still very, very wealthy people today, use their policies as a source of capital, banks included. Banks are some of the biggest purchasers of whole life insurance, but very few people know about it. I think it's because we've all been, in many ways, unfortunately brainwashed by the typical oh-so-average financial media, but we're trying to get a contrarian view out there to let folks know you have an option.
Now, the insurance companies, bless their pointed little heads, charge you interest on your own money that you're borrowing, don't they?
That's true. Yeah, there's an interest charged on a loan, which is what makes it a true loan. And so I appreciate you bringing that up. As it happens, the policy continues to grow and compound even on the capital we borrow. So this is not going to be a good tool from most insurance companies. Most insurance companies will charge you interest, but almost no insurance companies also count you as an owner in that same company. Imagine you and I got into business together, Doug, and we decided to be a mortgage company. We started a mortgage company together, let's say. And let's say that as we're getting going and we're getting customers and so forth, let's say that I also need a mortgage. I personally need a mortgage. Would I go to any other bank? Well, of course not. I'd come to you and me, right? Well, would you want to loan me the money? Well, sure. I hope you know I'm good for it, right? I'm a co-owner in this business. Now, here's another important question. Would you, as a co-owner in this mortgage company business, would you want me to pay you back? I'd hope so, right? I'd hope you'd want me to pay you back. Well, would you charge me some interest? You bet. Even though I'm being charged interest as a borrower, I'm a co-owner in that company. And so I'm, in essence, benefiting from the interest I'm paying. That is how it works with a mutually owned life insurance company. When it's mutually owned, you and me, are the policy holders. We are also the owners of the company that has a loan against our policy. So as we pay an interest, which is very reasonable, usually it's well below market rates, especially in this day and age as inflation is soaring. We're talking in the low single digits usually. As it happens, the policy continues to compound and grow as if there was no loan. So we have what's the fancy word there is arbitrage. But what this means is it gives us a benefit even when we borrow against the policy.
Now, I don't mean to be the guy who tells the bad joke at the party, but when you've got these loans out on your life insurance and then you meet the bus unexpectedly, what happens to the payoff? It's reduced quite a bit, is it not?
Well, yeah, as you have already accessed some of that death benefit on this side of the grass, when you move to the other side of the grass, your family gets, let's say it was $1 million death benefit and you had a $100,000 loan against your policy. Your death benefit payout would be 1 million minus 100,000. And so your family would get $900,000 income tax free. I think they'll have to struggle along on 900 grand, right? Now, where did the other 100 grand go? Well, hopefully it went to buying, maybe it was a piece of real estate. Maybe it was a car you bought. Maybe that's a nice car, by the way. Maybe it was paying off some debts. Whatever you use that 100 grand for is also a part of the benefit that your family receives. They still get to keep the car. They still get to keep the real estate property. So they're made whole one way or the other. Now, you're right, Doug. We do need to think about strategic ways to pay off policy loans, if for nothing else than to borrow it out again for the next car that you might need to buy or the next kiddo to send through college.
And how do you recommend people do that when they have all these other demands on limited income?
Start where you can, and don't do this just because you heard it on a podcast or a show. You want to make sure that you've done this correctly. Sit down with a bank on yourself professional. Make sure that they know that you have certain goals, concerns, what your cash flow limits are. None of us are infinite. We all have a limited amount of resources to go around. But what I have found over my years of doing this and working with hundreds of clients around the country is that it's a surprisingly easy way for folks to be able to reposition some of their priorities, cash flow, assets, liabilities. For me, I was overpaying on low interest student loan debt. And so for me, it was a no-brainer to be able to then reposition that payment, that overpayment to Sally Mae, into what is now an asset for me and my family. Rather than throwing money into a hole, I'm building up an asset that my family can now benefit from and use. And since we've started this project years ago, we've since paid off all the student debt. We've since used it for other means and projects, investments, and more. And it's been a tremendous, I'd call it like a central hub for our financial life.
Mark, did this just pop into your head one day, or did you read something about it or listen to what was back in the days talk radio?
Oh, well, a little of all of those things, mostly the latter several. I'd say my brain is a terrible place for keeping ideas. Maybe we come up with a few every so often in the shower or walking the dog. But no, the book right behind me, actually, The Bank on Yourself Revolution by Pamela Yellen, really is what sparked my interest and intrigue. It became a New York Times bestselling book, and a good friend, a mentor of mine, handed it to me and said, Mark, you ought to read this as you're struggling to pay off your student loan debt. So I'd recommend anybody wanting to learn more about this to check out Pamela Yellen's book, The Bank on Yourself Revolution.
Now, you have written a number of books yourself. Tell our listeners and viewers a little bit about them.
Sure. Yeah. In fact, I've had the great privilege of co-authoring a book with Pamela Yellen. The book is called The Secret to Lifetime Financial Security. And in there, we get into a number of different strategies, approaches, tactics that help people take more control of their financial life. I feel like in this day and age, with so many things that are so uncertain, many people feel like just a tennis ball floating down life's gutter. But we have ways to move upstream financially if we know how. And it just comes down to being introduced to strategies and given the courage to put them into practice.
There is some talk these days about, there's going to be a recession. Does this work in the recessionary times?
Well, that's a great question. Whole life insurance for several hundred years now in this country has resisted and even benefited from downturns in the market. Cash value life insurance, specifically whole life insurance, is guaranteed to grow no matter what's going on in the stock market. So as we're recording this, the markets are down, some of them over 25%, and it's continuing to look like a look out below plunge for some of the indices. And as a certified financial planner, I need to make sure that at least some of my clients' portfolio is protected. So as we look at options guaranteed to grow for you every single year, sounds like a pretty good option for at least some of our cash in our portfolios.
If one watches television for more than 30 minutes, you're liable to see 3 or 4 commercials for financial planners. How do we know who's the financial planner for us?
Well, it comes down to trust at the end of the day. It doesn't matter what the letters are after one's name. It really still comes down to trust. I would say if you're interested in this particular strategy, to make sure you work with a Bank on Yourself professional. It's one of the best groups I've ever been associated with, and it's the only certification and authorization program that makes sure that the policies are designed correctly and that you've got someone who's on your side of the table working with you rather than just working for a big fat commission. I've seen average financial infotainers on the radio and advisors sitting across the table from their clients telling them that they should be putting more money into things that they have no control over and no business investing in. So by putting some money into things that are safe, predictable, liquid, and some significant tax advantages, I believe is doing what's right for our clients.
Is it sometimes just too late for a person to start this?
Well, we have clients that start even as young as 85 years young. And I've had folks who are about eight weeks old starting one of these policies. So it's really a whole life, forgive the pun, Doug, but it's a whole life solution. But yeah, even if you might have a couple of extra candles on the birthday cake, or if you might have a couple of health issues, I wouldn't count yourself out. You can be the owner of a policy, even if you might not be the insured. Just had someone the other day who spoke with me. He had just had open heart surgery, so that counted him out for life insurance. But he still became the owner of a policy on his wife, his 3 adult children, and multiple grandchildren. So he owns 12 of these policies, and he's the bank for the family. If, in essence, he's being sort of the bank of dad, you might say.
Or the bank of dad, I hope.
Yeah, that's right.
Mark, what would you like to add for our audience that we have not had a chance to talk about?
The best and most important advice I can give in a general way is to think carefully about what you want. I believe that we are told what to want by the average financial media. We're told to put money into a 401k. We're told to go invest in crypto. We're told to, pay off the low interest or zero interest credit cards. We're told to get the brokerage account or the meme stocks or the NFT fungible tokens, non-fungible tokens. We're told to do so much. And yet, when do we ever stop to think about what our wants and needs are for ourselves? So grab a notepad, a legal pad, have a seat, 5 minutes, grab a cup of coffee, and decide for yourself, if I could just paint with a magic brush, if I could create a brand new financial vehicle, what would it look like? What sort of characteristics would I want it to have? Let's take the labels off of money for just a minute. Let's take the bias and let's take the news media out of it for just a minute and just decide for yourself, if you could design your own perfect financial vehicle, what sort of characteristics would it have? What sort of attributes would it have? Maybe it's got some guarantees. Maybe it's got some liquid access to the cash for any need you might have. Maybe it's got the ability to generate some passive income. I don't care what your answers are, as long as you spend that time to think critically about what you want. Then you can approach the financial industry with some courage and, I think, some willpower to make some smart and informed decisions.
Did you get this background growing up? Did you learn it in college or off a bubblegum wrapper or what?
Well, I certainly didn't grow up with a silver spoon in hand, that's for sure. My first memory of money was going to a bank with my mom with about $50 accumulated in coins and dollar bills from allowance. And the job that day was to go into the bank and open up a checking account. I was maybe 5, 6 years old. She was trying to teach me, a little bit about money. And her job was to do the paperwork. My job as a little 5 or 6-year-old was to hand over my little wad of cash to a complete stranger called a banker. And you probably don't have to hear me say that I was very skeptical about this whole arrangement. As a 5-year-old, I did not trust this stranger. Who was this guy and why was he taking my life savings? Now, as it happens, I wasn't far off from the truth. I've been wrong about a lot of things, and I certainly was pretty naive at that point. But bankers are fellows who will lend you their umbrella when the sun shines, but wants it back as soon as it starts to rain. That's a Mark Twain quote. So, we cannot give our bankers our financial future. They will do with it what they will. When they control the environment where your money lives, they're going to win by default. So yeah, it's certainly something that's been creeping into my mind over the last several decades, and I look forward to serving folks and learning more myself as the years go on.
And where can our audience get more information about you? I suspect you probably have a website.
Sure, yeah. Well, if you want to build real wealth outside of Wall Street and you want to do it in a way that's safe and predictable, I can help. I and a number of Bank on Yourself professionals are ready and happy to sit down and chat with you. You can go to growyourwealthsafely.com. That's growyourwealthsafely.com. And we can sit down and have a 15-minute introductory call just to say hello. And I'd be happy to do that at your convenience.
You've been watching the Biz News Podcast. We welcome your input. Send your email to editor@biznews.com. Thanks for watching.